Hi traders, welcome to this live webinar with FXDD. My name is Chris from Elite Currency, and we're going to take a look at live trading in the markets, financial markets, Forex. We can take a look at CFDs, commodities. Feel free to use the chat, of course, as you can see in the right lower corner if you're looking at this live, or place a comment if you're looking at it on YouTube. Before we dive into the market, though, I wanted to let you know of this disclaimer. It explains the fact that trading for exchange and global financial markets in general are considered high risk. Please seek the advice of an independent financial advisor for more information on that. All right, so with no longer ado, let's take a look at the charts. Let me switch the screens here so you can see what I'm seeing. All right, there we go. So we're seeing at this moment, there we go. Now you should see the charts. We're seeing a euro-dollar retracement at this point. But I think it is not a reversal, and I think it is a pullback for more upside. If I look at the analysis, it is, in my view, a strong momentum continuation at this point. Now, that would change if price does break probably below this this zone in here, where we have support, the 144 EMA. Basically, a break below that would change perspectives, of course. And in that case, we're not looking at a bullish continuation. Otherwise, I think there's a fair chance that this is a pullback within the uptrend. We have a clear set of higher highs, higher lows. We had a pretty good supply and demand zone in here. Look at price go flat and sideways. Look at the momentum prior to that as well. Good momentum up. Follow my cursor here, as you can see. Maybe I can make that a little bit more visible by using this. Yeah, there we go. So look at the momentum up. Then look at the sideways. That's the supply-demand zone, then up. So I think that if price goes back into that zone, there should be a bullish bounce. All right. So, you know, trading is never, an analysis is never 100%. It is always a probability that we have to assess in the long term. But this is my best estimate at this moment. I think a move up to 115.50, 115.60 to test this high and this top is the most likely at this point. Now, whether this is, you know, what type of wave pattern this is, I'm not sure at this moment. I'm thinking about a wave 1, 2, 3, but if it was a wave 3, it would have gone, you know, like a dynamite, just like straight up, like an, well, dynamite is not the right word, but like an arrow, right? Like just straight forward. It is not doing that, right? We see bearish engulfing twins. So on the 4-hour chart. So yes, we are getting that pullback. It is not an immediate follow through to the upside, despite the break above 115, because we did have a break above 115 with this candle. All right, close above it as well. So we are seeing a little bit of a false break, maybe, of the R2 weekly pivot point. But generally speaking, I think, as I said, I'm not sure how deep this pullback will go, but the stops anywhere in this area around 114.20, 114.50, I think could be good support. And it might not even go necessarily that deep. Let's take a look at the hourly chart. All right, and it depends a little bit on the price patterns we see at this moment. We see 3 bearish candles in a row. That's indicating a small bearish momentum to the downside. So I would not anticipate a very quick reversal to the upside at this moment. What I would anticipate, if it is a bullish pattern, is a move like this, that we get basically a little bit of a downside. We get a move up, but that fails to break to the upside. We get a move down again. We get either a triangle or a flag. And if you get a flag, it will look something like this. And then we get a break and continuation to the upside. This is what I'm expecting at this moment, or a triangle. It's also possible that we get a break below the 21 EMA, a break above it, a break below it, and a break above it. So probably the second break above the 21 EMA on this hourly chart would be the best way of tackling, you know, the continuation setup, in my view. Now, we traded the euro dollar yesterday successfully. Are in a trade at this moment, which is down a little bit, but the stop loss is at the invalidation level, so it can do any kind of pullback here as long as it doesn't hit the invalidation level. You know, the trade is good to go. If you're not in any euro dollar long yet, I personally, from a discretionary point of view, would not enter now and would rather wait for these patterns, these price patterns to play out. Let's see how this pullback behaves. You know, if it's anything of a triangle pattern or a bull flag, I'm expecting a continuation up to 115.50, 115.60. And then it depends. Like, do we get a big bounce here? Well, in that case, maybe this is a wave A finished. If you get a big break above this top, then we might still be looking at that wave 3. All right. So, the wave pattern itself really depends a little bit on what happens with this top. Of course, how does it behave here? If it breaks through this, then maybe the wave A is already completed, or wave 1. In any case, no matter what the wave pattern count is exactly, we are looking at a bullish momentum. The question is, are we going to see an extension of that bullish momentum to the upside, or are we going to see a bearish pullback first and then a continuation? For the moment, I'm leaning towards a continuation higher. Despite the bearish engulfing twins, on the 4-hour chart, I think that just indicates a pullback. If I look at everything together, I still expect a follow through here. Let me just add one tool. 1 second. Doesn't matter. So, yes, that is the euro dollar. All right, moving on. Pound dollar. All right, we got the pullback on the pound dollar. I didn't like this breakout all too much here of this trend line like this. And that proved to be true. We got a wick, a bearish candle, and we're moving back into 21 EMA. For those that maybe saw a video of mine earlier today, perhaps, that are following us, that's what I was already anticipating, that I think we're going to get a breakout, but this did not look like the right spot for it. I think that, and that had to do with the price action versus the 21 EMA, right? Pretty deep retracement here. So the first break above it is often risky. And I was looking for a move back into 21 EMA and the second break above the 21 EMA. And I think that if we do get that, that would look like a better breakout and has a better probability of indeed succeeding and moving up to the target at 132.50. What would a breakout look like? In my eyes, a breakout is a candle that closes above 130.130. All right. And in that case, I think that if we have a candle close on the hourly or 4-hour chart above that level, I think there's a decent chance that we're going to see a breakout. Not only a close above it, by the way, but also a close near the high. It has to be a candle that is in control, of the situation. The bulls have to be in control. So yes, candle close near the high and a decent sized candle. You're not looking for something as very small as this. I mean, 30, 40 pips would be nice, right? If it's a 10 pip candle, it's too small. So I think pound dollar otherwise is looking good for upside. And that has to do with the fact that we still have momentum here to the upside like this momentum. And this is looking like a correction, ABC correction, bounce off the 38.2 fib, as you can see, and challenging this resistance trend line. So I think we're pretty well suited for continuation to the upside at this moment. All right, so you know what I'm waiting for on the euro dollar and now also the pound dollar. 1 hour, 4-hour breakout above 130.130 for the pound dollar. Dollar yen is finally getting a bigger correction. It's something that we were thinking about for a long time. Ultimately, in here, I was expecting one more higher high, actually, ironically, because of the sideways movement. But it crashed below the 21 EMA, well, not crashed, but it moved below it. And now it's maybe crashing. The second attempt below the 21 EMA is having more success and is showing impulsive price action to the downside. So from this perspective, the dollar yen is showing dollar weakness, just like the euro dollar, pound dollar, and it's actually breaking through the S1 at this moment. And this is a train that is moving, so it's a little bit difficult to trade at this point because there's really no pattern that would allow kind of an entry, maybe on the 5-minute chart. If you were looking at 5-minute trading, perhaps, yes, there were some pullbacks into the 21 EMA here that could have been used as a pullback. But otherwise, there was not much to offer with this dollar yen as it just breaks. The initial breakout here with the 4-hour candle right? Could have been one way of trading it right here. Now, I think at this moment, either it would have to be a 15-minute bear flag like this. Let's go to the 15-minute chart. 15-minute bear flag. Maybe break above the 21 EMA, then break below it, hook back to it, and break again below it. That would be maybe one way. Otherwise, on the hourly chart, I think we're looking for a pullback into the 21 EMA as well to trade it. So personally, wouldn't trade it right now. Waiting for some correction. All right. Otherwise, so those are the three majors. Let's take a look. Bitcoin still going flat, not very interesting at this moment. Gold has hit this target at the weekly R2 at 1320. It looks like it still has momentum, steam left, but it is at a major resistance spot at this moment. But you know, it could push up. It could push up. There's a lot of momentum at this moment. So, and there's a bigger resistance maybe at 1340, 1350. So I can't rule out that it will continue. Let's see. Well, that's a good question. Looking at the daily candles, I think there's no reason necessarily to expect, despite the big resistance here, necessarily to expect a reversal or a big change. I mean, I don't see that on a daily candle. They seem pretty in control, the bulls at this moment. So I'm leaning towards holding gold, but of course it depends on so many specifics like personal preferences, right? Like how much risk you have on it, how important is the trade to you, how much profit you already have in your pocket, and or you could think about a scale out, a small scale out, maybe a quarter scale out or a half to lock in some profit. Maybe you feel better with that. Depends also on how nervous you are with this holding or exiting. You know, so there are some personal preferences that do matter. But just like if I would have to choose, you know, between one or two, I think holding, because it really it looks like the bulls are firmly in control at this moment. All right, so the other one was New Zealand dollar. All right, then I see some other comments. We'll take a look at that soon. So New Zealand was a classical triangle. We'll show you now. Hang on. All right, so the week opened here, and you can see we had an A, B, C, D, E. All right, and the waves B, C, D, and E did not break their top or bottom, so it is a contracting triangle. And you can see that normally the second break works pretty well as a breakout above the 21 EMA. In this case, not, because we had a triangle pattern rather than a simple A, B, C correction. That's why typically the second break above the 21 EMA works well, because you have an A, B, C correction, and then the trend continues. In this case, not, because we had a triangle, which means we have two extra legs within that corrective pattern. But ultimately, we did get the corrective pattern we were looking for on New Zealand dollar, right? And yeah, that's the only thing is, in this case, it's maybe not as easy to trade. Either you anticipated the wave V, so you took a position at the bounce, then you're doing well. But if you waited for the break, you know, it's a little bit more difficult, because the breakout candle is huge like this, or a pending order above this candle could have been another option, right? But sometimes if a breakout candle is that massive and you're waiting for the breakout candle, you could miss it because you're sleeping, or you could miss it because it's just so massive of a candle. Now, this one is pretty big for the New Zealand standards. It's 80 pips. But I don't think that this candle is over. I think, like the euro dollar, this is probably going to be a consolidation zone, and I do expect a continuation. So I think that there's still some steam left probably in the Kiwi to make a move up to the weekly R2, for instance. I think it's likely, considering the strong daily candle and momentum that we're seeing at this moment. And otherwise, it could be a wave 3. We talked about this, you know, pretty often that this is in other places as well. In my last FXDD webinar, this is probably 1, 2, 3, 4, 5 ABC correction, wave 1, 2 of a C. So this is A, B, wave 1, 2. This is probably wave 3 of a C. Those, can be strong with a lot of momentum, and therefore we shouldn't be surprised by price going sideways and staying above the 21 EMA here. So what is this particular wave? If this is a wave 1, 2, and this is maybe a wave 3, wave 3s are always a little bit risky. I mean, in the sense that middle of the wave 3, you don't know if it's the wave C or if it is a wave 3. But if this is a wave 1, 2 of that C, then this could be wave 1, 2, 3, 4, 5 of 3. But wave 3 cannot be finished that quickly. So we're going to have to see some extension if it is a wave 3. It bounced off the -272 target. This first wave is about 260 pips. This is 220. So we need at least 40 pips more to be a wave 3. The wave 3, well, technically it could still be a wave 3, but then there's a little, almost no retracement possibilities here before it runs into the top of wave 1. So for wave 3, we would really expect price to go up to the -61.8 target at 0.70. So I think there's a fair chance that this volatility candle will see a push and continuation as it breaks this little triangle here. I think it will follow the euro dollar, or the euro dollar will follow the New Zealand dollar. I don't know. It doesn't matter. And both go up towards the target here. All right. So I have some comments on New Zealand. Let's see. Ali saying wave 5. And I agree with that, indeed. Let's see how far wave 5 continues. It is, once again, wave 5 of a wave 3, though, of a potential wave C. Wave 1 starting, wave 3 starting at 67.05. 67.05. Yes, yeah, indeed. So we had some good bounces here at the fib, here at the fib, breakout pattern, but I don't think it's over necessarily. But you can see how useful the moving averages are and the fibs, and combining them can be really, really strong. If you add a little bit of wave analysis, if you want to, I think it will help. If not, it's not really a must. Add a bit of a Wiz or Fibonacci sequence levels, and you can see how powerful these concepts are. All right, so at this moment, how to trade a breakout like that? Well, I'll be trading the euro dollar already, so I probably will not trade in New Zealand, but because I'm already in the euro dollar. But if I were to trade the New Zealand dollar, let's see. I think a 1 hour or 4 hour close, candle close above probably 69.20, I think should signal the continuation. And I don't think price, in that case, should go below 69. But if you want to be a little bit more safe, you can go below the weekly pivot point at 68.70. Target is 0.70, but I wouldn't aim for the very last pip. If you have a target at 0.70, I typically go some pips below that. So like 69.90. Depends how many pips you really want to squeeze out of it. Of course, the closer you get to 70, the higher the risk you might just miss that target, by a simple 1 or 2 pips, which is a pity, of course. And as a good friend of mine always said, what is it? 1 pip among friends? So you want to always be careful with squeezing the last pip out of a particular target. But yeah, that's something to keep in mind. So, all right. So otherwise, I see a question about euro pound, and a general question about a rule of thumb about reversal trades. So those are interesting things. So reversal trades are maybe not the best one to discuss because it's not something that I regularly do. It's really, I cherry pick them with so much caution that they're very, very rare. And but sometimes I do, indeed, if it's really things line up so much that they're like, yeah, almost like so good or seem so likely that it would be a shame not to take them almost, right? I always take them with lower risk though. right? So I take them with half the risk of a normal trade at the max. But I think you got to look for a lot of confluence. I think those make better reversals. So divergence patterns, candlestick patterns to confirm it on maybe multiple time frames, divergence on multiple time frames, hitting confluence of targets and support or resistance levels, strong levels, round levels, multiple fibs maybe, or at least one fib would be nice, fib target or fib retracement levels, maybe a weekly pivot point. I mean, basically, more patterns, support or resistance, the better. And then it's just a question of like, do you think that zone will hold? How is momentum looking like? Is it weakening or not? That helps too. If it is, that will support, of course, the reversal. And then what kind of target do you think it is? Is it a retracement or is it a massive reversal? And where do you exit with your take profit? Because that is important, because if you aim too ambitiously, you might have actually had a decent amount of profit in your pocket, but miss it. Or if you aim maybe too close and it turns out to be a massive reversal, then you think, oh my, I had a perfect entry and I left all that profit on the table. So try to establish also what type of trade you're trying to take and try to trade that. All right. See a question from M. Nail, but I'm not sure what you mean with first meeting and why you not heard anything. Can you specify that? What you mean with that? Otherwise, we're going to take a look at Euro Pound. I definitely understand why you're looking for more downside. Definitely bearish candle, and I can see that idea behind it. And I think I was also looking for a continuation lower in the sense that, I was looking for a minus 272 movement, right, to the 84.28. And this is a pullback of last week's candle. So certainly I understand that. And if we look at lower time frames, this could be a wave 4 of some degree, and could be a bouncing spot. That said, I am not really a big fan as yet of any trade on Euro Pound. I don't like the pair. Maybe that's one of the factors, but another could be that we have pretty strong daily candles. And yes, this could be a pullback, but I don't see necessarily any price action yet confirming it. We're above the weekly pivot point. I would personally probably rather wait. Let's see what I'm not sure what a suggestion is. Let's see divergence on the 1 hour chart. All right. And 4 hour. I would probably rather wait for more information. Maybe wait for a break of the pivot point, 21 EMA, wait for a hook back, and then look for continuation there. At this point on the 4 hour chart, I don't think that it's ready as yet. I think that this could still be maybe some kind of retracement for one more upside to the 38.2 fib and the weekly R1, for instance. I wouldn't rule that out. So I would still be on the waiting mode here with the Euro Pound. Long position from 87.07. Great. That's right at the weekly pivot point, actually. And yeah, I would probably move to break even, and either you survive this pullback or not. I wouldn't want to hang in there personally, and at least you don't have any loss on it. And that's a great job for a reversal trade. I don't think there's anything wrong with that. And if it does bounce, you got space to 87.80 where there's that 38 fib and a weekly R1. Well, it's up to you, of course. Always, obviously, this is just my 2 cents of what I would do in such a case. Decision with moving to break even can always be painful because it might go to 87 and then bounce. So you got to be aware of that, of course. But yeah, I still lean towards. I would lean towards taking risk off, indeed. All right. 38 and minus 272 target. You can see nice bouncing spot here for the dollar CAD. And at this moment, we're looking at some kind of correction, I think, back to the 21 EMA. This is just a simple, actually, pivot point indicator. It's called pivot 2. All right. And well, you can maybe write us in email if you want. All right. Maybe I think it's not protected or so I can send that to you. So you can send us an email at, wait, I'll write it down, at the usual spot, info@elitecurrency.com. Good. Kiwi is making retracement, but even if it moves lower, even if it breaks through the 69 zone, I think that 68.80, 67, 68.75, 68.80-ish here, a 90-ish will hold probably, in my view. I might be wrong with the $0 weakness, but that's what I'm leaning towards at this moment. All right, your dollar is still retracing at this point, but that's not so strange. I said that this pattern might take some time, so I have to wait for that, I think, for the moment. But otherwise, I'm bullish. I think that this is a discount for one more push up towards those targets. All right, I guess that's about it. Oh, there's one more request here. Take a look at Euro odd. Let's take a look. A very strong reaction at the double top at the moment on the monthly chart, weekly chart. Looks like a good continuation lower indeed. I agree. Let's see. Pretty good momentum below the third whiz level, closer to the fourth at this moment. Good HMA, a lot of momentum at this point. Second break below the 21 already has happened. Up in here. Let me change one thing. Hang on. Not sure about this particular spot. I do like the momentum it's showing at this moment. Yeah, I'm leaning towards a pullback indeed. It's right at whiz 3 at this point, and it's pretty close to whiz 4. I like it. I'm just not sure about this spot indeed. I would probably like to see a pullback, maybe that goes into the 21 EMA, but doesn't break above it. 158.25, 158.50 would be ideal. 160, it would be really deep if it pulls back that deep. That would, in that case, we have a B and a wave C. That would really be very big wave C, actually. In that case, we get a pretty big extension of the correction, A, B, C. I'm not sure if we got, it's possible. That would totally change perspectives indeed. And we would need to break through these bottoms, I guess, to get rid of that threat. But if on the hourly chart, if it does stop in this area, which we don't know yet, we'll find out soon. If it flies up and breaks through 158.50, I would set it aside for the moment, because in that case, indeed, we might get a bigger wave C to the upside. This could be a wave A. This could be B. And this could be wave C, and of a B, and up we go for C. All the way to 160 indeed, that's possible. Whereas if it stays around, if it stops, and we have a fractal at 158.25, 158.50, well, that would certainly change perspectives, and that could indicate that that this is a pullback for more downside. If it breaks above it, then we should see a bigger move to the upside. So let's see, because it could also be a no problem. It could also be a shallow pullback, right into WIS 3, because it is below WIS 3. So it could pull back to WIS 3, then move down to WIS 4. It could be just a shallow pullback. It could be like a reaction to the bottom, but not necessarily a big reversal bounce because of the bottom. Hit WIS 3, seller step in to push it lower. Could also be, I think it's 50-50. Both are equally possible scenarios. I think the best way to know which one is happening is keeping an eye on the fractals, all right? Fractals at this 158.25, 158.50 zone. If we get a fractal, I think there's a good chance of a continuation lower. That's my 2 cents, all right? All right, folks. Well, wish you all good trading in any case. By the way, if you're looking for more webinars, we got them. Hang on. Let me just share that with you right now. There we go. These are the links. All right. Top one for live trading webinars. Bottom one for more educational webinars. We got Sunday, part 2 on Fibonacci. And then later in February, even part 3. So looking forward to see you there. And wish you all good trading. Cheers.